In this video, I'm going to be showing you the best way to trade the London Breakout Strategy away from the mainstream, away from everything you've watched in the previous videos on YouTube. This is going to be very different. So pay close attention because I'm going to be showing you the absolute best way and the best time to trade the London Breakout Strategy. Now, this strategy is very simple to understand. It's very easy to implement. Now, what I want you to do is close all distractions, grab your pens, grab your papers, focus, and listen to what I'm about to tell you in this video. Now, when it comes to the London breakout, there are different ways people trade it, but I found out the best way to trade this. Now, it might not seem the way you might think it is, right? So I'm going to explain it how it works now. So now what you're going to be looking for is, because we know that the London breakout strategy happens during the London breakouts, during the London session, right? So what you're going to do is you're going to have to identify each session. You have your Asian session, you have your London session, and you have your New York session, right? So now let's say this is our Asian session, this first box here. What you're going to have is during the Asian session, you're going to have consolidations like this, and then coming into the London session, you're going to have your breakouts. That's usually where people buy and buy like this. Now, it's not that it's bad to buy that. There are certain ways you can buy that and be profitable, but in this video, I'm going to be showing you a very different way of doing that. So I've explained this concept in my previous videos, and my subscribers might know this. So what you're going to get is during the Asian session, you're going to have your consolidation like this, and then the market is going to break out either to the upside or to the downside. When the market breaks out to the upside or to the downside, you're not going to just take the buy. You're not going to just buy blindly because of the market's breaking out of this Asian session consolidation. What you're going to do is you're going to wait. You have to wait. Have patience. Wait for the setup. Now, what's going to happen is when the market breaks out during the London session, this could also happen during the New York session, right? So when the market breaks out, you're going to have an M formation like this. The market is going to pull back and go back and retest that high because this is going to be the high of the day. So market goes to retest this high of the day, fails to break it. Now, when the market goes back to this high of the day, you're going to have certain things that are going to happen there. You're going to have different candlestick formations, like you're going to have hammer, inverted hammers, barrel tracks, engulfing candles, star formation, morning star, evening star, whatever they call it. Right, so you're going to have those candlestick formations here on this second leg. They call it the second leg. So this is your double top, and this is your M formation, right? So when you get this, you're going to be entering inside here, right? And then what's going to happen, what you're going to expect is the market is going to continue down like this and continue down. Now, you can't just take every single breakout that happens. If the market breaks to the downside, doesn't mean you buy. For example, if the market breaks to this downside, it gives you a W formation. Doesn't mean you just blindly buy the W formation, because this can happen, right? And also same thing goes for the M formation. Now I'm going to be showing you how to do this accurately so that you avoid these false breakouts and false reversals. What you're going to do is you need to identify the trend. You need to first and foremost identify the trend. Where is the market going to? Is the market going to the upside? Is the market going to the downside? Because if the market is going to the downside and you're trying to take this W formation, it's not going to work because the market is already trending down. The order flowed, the market is going down. It's a downtrend. So taking this back up, it's not going to work. It's more complex to trade this as a reversal than to trade this as a continuation. So if you're struggling in trading, or you're struggling identifying things like this in the market, or struggling seeing this, the best way to do is identify the trend and trade in line with the trend. It's more complex to trade a reversal. There are ways the market reverses, and there are other things that you can apply in order to trade reversals. But the easiest way and the most profitable way that you can do this is to trade the continuations. Now, how do you identify the trend? There are different ways of identifying the trend. You can either identify the trend using market structure with higher highs and higher lows, or you can identify the trend using moving averages, as you can see here on the chart. Now, you don't just use any moving average that comes to your mind or any number. There's certain moving averages that help you identify the trend. Now, in this video, I'm going to be showing you that. Now, the moving averages you're seeing on the chart is the 200 and the 50 moving average. This blue one, this sky blue one, is the 50 moving average, and this black one is the 200 moving average. If you want to add them, just simply go to indicators and search for them. And then also these sessions you're seeing on my chart, this is Asian session, this black box is Asian session, then this is London session here, and then this is New York session all the way down here. If you want to add them on your chart, just simply go to indicators and look for the indicators there. You can, if you're looking for the session indicator, just type FXN and look for Asian session range by FXN, Billy FX, right? And then this should pop up. You can customize it whatever color you want, whatever design you want. You can also set the timings and all that. So Now, what I'm going to be explaining now is the moving averages. How do you identify the trend with the moving averages? So now we're going to have the 200 and the 50 moving average. So we have the 200 moving average going like this, which is the black one, and then we have the 50 moving average going like this. So now what you're going to be looking for is to identify the trend with moving averages. You're going to have to identify it with price. What is price doing and what is the moving average doing? So if price is all the way like this, right, and then the moving averages are above price. Let's say the 50 and moving averages are below, are above price. Yeah, sorry about that. The moving averages are above price. Price is below the moving averages. That means the market is trending to the downside. And if the market is like this, and then the moving averages are below price, right, that means price is in an uptrend. It's very simple. If price is below the moving averages, price is in a downtrend. And if price is above the moving averages, price is in an uptrend, because the moving averages calculates the close of each candle. So on average, the close of 200 candles, the close of 50 candles, uh, the average of that is what the moving average is calculating to give you the direction that the market is going to. So if the market is trending downwards, the moving averages will be above price, and if the market is trending to the upside, the moving averages will be below price. So now let's look at this on the chart with the example of the London breakout strategy that I just told you about. So now, when you look at price here, what happens? The market was going to the downside, right? You can see the market was trending downwards, right? All the way here. And then all of a sudden, the market goes to the upside. How do you know that the market is in an uptrend now? Because you can see here that the 50 crosses over the 200 moving average. So that's an uptrend. You're entering an uptrend. Now, you're going to be looking for buys. When you look at the market here, coming into the market, you can see that the market consolidates during this Asian session here, and then the market breaks to the downside. And what happens? If you change it to a line chart, you can easily see that this is a W formation here. So what you're going to be looking for is your candlestick formation. What candlestick formation are you looking for on the second leg? So on this second leg here, what are you looking for? This area here. What are you looking for? You're looking for candlestick formations, hammers, stars, railroad tracks, engulfing candles, whatever, right? So now what do we see here? We see that this is an engulfing candle. So what do? We enter on the close of that candle, and we put our stop loss below price, below the low of the day, which is here. You can put it like 5 pips below this low, or 10 pips below the low, right? And then you can go for whatever target you want to. In this example, you can see that the market went for about 90 pips before the day ended. The next day, what happens? The next week, Monday, what happens? We see that we're seeing an uptrend, right? Because the moving averages are below price. So we're in an uptrend. What happens? The market consolidates, it breaks to the downside. What do we have? We have a W formation like this, right? This is a W formation. This could also be considered a W formation here, right? But they decided to extend it and make it larger. So this is a multi-session W formation. So what happens? On the second leg here, we're looking for candlestick formations all the way here, right? So what do we get? Let's see. We get our star formation. We also get an inverted, no, not really an inverted. This is a normal hammer. This is a hammer formation. This is a confirmation right here. You can enter here, or you can enter here if you want a safer entry on this star formation. So you simply buy here, put your stop loss below, and this went for about 45, 60, 46 pips, right? So the next day, what happens? Let's see if we get the same thing. Okay, we're seeing an uptrend, so we're looking for buys. What happens? The market consolidates, the market breaks to the upside. You're not taking this, you're taking this, right? So the market breaks to the downside. What do we see? We have this W formation all the way here. Let's see on the second leg, what do we have? Here we're looking for candlestick formations. What do we get? We get this railroad track. We get this hammer. You can see this red hammer here, right? You can enter on the close of that. You can enter here, or you can enter here, right? Anywhere in there is a good entry. So if you entered somewhere there, let's see, the market before the day ended went for about 20 pips. Put your stop loss below the low. If you held this to the next day, you can see that the market continued to go up and up and up and up, right? Market continued to go up and up and up. And this went for about, the next day it went for about 150 pips, right? So if you held this to the next day, you would have caught 150 pips on this move, right? And we can see that the market didn't break to the downside anymore, right? So the market just stayed inside and went all the way up like this, and this was just consolidation. So that's basically how it is. The same thing applies for the downtrend. When you have a downtrend, and price is going like this, you have your moving averages above like this, you're just going to be looking for your Asian session consolidation, wait for price to break to the upside, look for your sells, enter on the second leg, and put your stop loss above there, put your target wherever you want to put it. And that's basically how it works. Now, if you found this video helpful and insightful, click the subscribe button, like the video. And if you want to learn more about this strategy, how to trade this strategy, click the video on your screen and it will take you to that video. And I'll see you guys on the next one.